Good morning to us all. I welcome you to the January edition of the Black Star Market Color, and a very big Happy New Year to you. We have just a few people still in the lobby, and we are still admitting them in. We crave your indulgence to just give us up to 2 minutes so that we can commence the presentation. Thank you. All right, good morning once again, and I warmly welcome you all to the January 2025 edition of the Black Star Market Color. For the uninitiated, this is a thought leadership program launched by Black Star Group to bring together like-minded individuals within the financial industry like yourselves. The platform or the call allows us to delve into key market events, share ideas, and then also uncover some actionable insights to navigate the investment industry and then also to assist us in our investment decisions. This year promises a host of interesting topics which were crafted from the suggestions we collated from you in the 2024 December edition. And so trust me, this year, you don't want to exclude yourself in any of the sessions we would be hosting. Today's presentation will be delivered by Daniel Tete, an accomplished senior analyst of the research and analytics and insights team here at Blackstar. So we are talking about insights into 2025, which is obviously going to influence your investment decisions within this year. It's going to be a broader outlook, and then it will be narrowed down to Africa and then to Ghana. Significant developments in global, regional, and local markets, including insights on economic forecast, inflation trends, currency, and then also investment themes for 2025 that could be considered. So yes, we are excited to have you join us in this session. And so I won't take the wind out of the sail of the presenter. I would call upon Mr. Daniel Tete to get us started. Thank you very much.
Yeah, thank you very much, Ernest. I hope I'm audible. You can hear me. Awesome. Thank you very much for the introduction, and Happy New Year to every single person on the call. Hopefully 2025 is going to be an amazing year for each and every single one of you. The very simple catch line that I'm entering 2025 in is that 2025 is going to be your year of many celebrations. So hopefully you're going to experience that this year. Now, it's very important that going into each year, you have clear view or clear insights as to what is going to happen in the year, or the powers that may be at play during the year for fund managers, for individual investors, for high net worth clients, for people in the banking industry. Every single person needs to have an outlook of what the year is going to look like and what things are going to transpire. And that is being forward looking, that is being proactive. And that would help most people, even in their capital market expectations and how to position their portfolios in 2025. So those are some of the things that we are going to try and address in this presentation and subsequent presentations as well during the year. Do well to stay with me. I'm going to try and do this in an hour because one of the key recommendations that came from the very last market color to end the year was about timing. So please stay with me, and I'll try and make it as simple as possible so that we can bounce off ideas of each other at the end of the presentation. So yeah, let's go ahead. So there's a lot happening around the world, right? And coming into 2025, now that Trump has been elected as president of the United States of America, every single person in the world is expecting China and the US to go toe to toe in 2025, especially based on some of the comments that the current US president has made whilst he was in opposition, even in his first term in government and now coming back into power. Everybody has their breath held, looking at what the outcome is going to be between the US and China. Now, the backstory is that the US has hit at China in so many ways. One of them being trying to ban TikTok for most parts of last year, happened sometime this year, but that has been overturned. Now, China has hit back. Even before the ban on TikTok in the US, China banned the exportation of gallium and germanium, which are very essential materials in innovation and technological advancements in the global space. So they banned exports of gallium and germanium into the US. Now, gallium and germanium have key military applications. So by China banning that, it puts the US and I mean, US companies a little bit on the back foot in terms of the kind of advancements that they want to see in the technological space, etc. Now, China has been very clear about their position with the US in the sense that they feel that the US may be really overstretching their national security issues and trying to use that as a ploy to illegally sanction them and try and put China a few years back in the kind of pace that they have seen in their technological advancements and kind of the progress that they've made over the years. Now, away from that, German automakers in China, BMW and Porsche, they've experienced a very sharp decline in sales. Now, they are not the only ones who have experienced this downturn in their sales numbers. Volkswagen also recorded a very huge decline in their sales in China, about 8.3% in 2024. And the main reason is that you have a lot of Chinese firms, right? Like BYD and Xiaomi producing very similar quality electric vehicles, similar features, and sometimes even better. And all of these electric vehicles are coming at a relatively cheaper cost to consumers in China. So then there's no need to purchase, I mean, similar electric vehicles from other automakers, like the automakers from Germany in BMW and Porsche. Now, that explains why the US has somewhat taken the position that it has taken in terms of China. Because if you have a country that is very good at production, has the technical know-how, and has been able to make such breakthroughs in technology, producing such technology at a much cheaper cost and importing them into your country, then you get to a place where you have companies in the US or US companies being put on the back foot because you can't then compete in technology and then compete in cost and price as well. So that's the main reason, that's the angle that the US is coming from to try and place such bans on China, etc. Now, still in the midst of innovation and tariffs, the Canadian Prime Minister has stepped down, while the US has also made claims that it's going to impose some level of tariffs on Canada and Canadian goods. Now, the Canadian Prime Minister, whose name is Justin, I think, he made quite a number of statements in his very last statement before he resigned. He mentioned the fact that there seems to be a global wave against incumbent governments, and we've seen similar in Ghana, we've seen similar in Botswana, you've seen a similar thing in the UK with the labor markets coming into power for the first time in about 14 years. And the global wave against incumbents has been really high. Now, he's done, from his point of view, he's done a lot of good for the Canadian people, but he's not been given a lot of credits. And people in his party as well have not been happy with him, especially with the fact that inflation has been on a very high trajectory since he came into power, and that hasn't changed. So he's lost inside caucus votes, and that has led to his resignation, even in the midst of conversations around the US imposing quite a number of tariffs on Canada. So away from innovation and tariffs, if you look at global stability, China's general or Russia's general has come out with very bold statements against the UK. Now, Ukraine managed to drop a few bombs into Russia, and from investigation from the Russian bureau, they claim that parts of the technology that were used in that attack had attribution to the United Kingdom. So he came out with a very bold statement that if the UK is not very careful with the way they act around Russia, they are going to wipe the UK off the map. So that's a brewing conflict that could also come and lamp up onto what we have in Israel, Hamas, and what we have between Ukraine and then Russia. Now, still on global tensions, thankfully, there's a ceasefire between Israel and Hamas. Now, this was brokered by the likes of Egypt, Qatar, and with some level of influence from the US as well. What this does is coming into 2025, it reduces some of the tensions that, or some of the views that people had about global tensions affecting global growth, etc. Because if you have the Israel-Hamas war going out of the picture, then you have just the tensions between Russia and Ukraine being the only standing strong geopolitical tensions that we are going to have during the year. Hopefully, this tentative ceasefire is going to last. What this ceasefire does is that it makes Hamas, on the downside, it makes Hamas think that they have the requisite firepower to be able to stand against a global giant like the U that like Israel, which had support from US, etc. in this war. What it does is that it makes Israel look a little bit weak, because the expectation was that it was going to win this war pretty much hands down. So the the real causes of the conflicts between Israel and Hamas haven't been sorted out, which leaves room for further escalation if the hostage negotiations, etc., do not go. But for the meantime, there's a ceasefire in between Israel and Hamas in Gaza. Now, away from some of these things that cause global and geopolitical tensions to some of the economic challenges that we have seen across the world. Now, UK is struggling with very high levels of inflation, and business confidence is dropping. And you look across the US, and inflation that was dropping for a major part of 2024 is now going back on an upward trajectory. In the very last reports that was sent out, it went up to around 2.9%, which you can see here, from about 2.7%. And main effects were from energy, poultry as well, because there's a very huge bird flu in the US as well. So all of those had very significant impacts on food inflation in the US. Energy, etc., played into the trend that has been seen in US inflation. If you come to Ghana, the story is the same. We've also seen a climb in inflation between November and December, went from 23% to around 23.8%. And similar to the US as well, Ghana has seen a lot of fires. You've seen the LA fires, we've seen fires in Kantamantu, we've seen fires in Techiman. And if you really deep some of these global events, or you deep some of these fires that you've seen in the US and Ghana, they could have very serious inflationary impacts, especially based on the fact that if some of these fires extend to very key markets across the country, key markets that even the Ghana Statistical Service goes about collecting data on food prices, etc., we could have a situation where these fires could have significant impacts on the trajectory of inflation. So overall, there are lots of things going on across the world, and maybe I might have made 2025 look gloomy, but really and truly, every single year is challenging for every single investor, right? And 2025 won't be any different. Some of the very succinct quotes that I saw from the Barclays 2025 outlook. Now, it's very good to see the big picture. Now, what really is the big picture? Because you can't look at things in isolation. How do we connect the dots? Now, what's the expectation for the global economy going into 2025? Now, let's take it back a bit. Coming into 2024, that was last year, so somewhere around 2023, heading into 2024. The view was that let me put up this marker. The view was that global growth was going to remain around 3.1%, right? Because at that time, 2023 hasn't really ended. So they weren't really clear what it was going to end the year at. So they were expecting that it was going to remain around 3.1% in 2024, because the idea was that inflation was expected to fall faster than expected, because you had gone through a very high or a very hawkish regime in terms of the global space. And you also there was expectation that there was going to be withdrawal of fiscal supports across the world because debts were rising, inflation was very high. So the withdrawal of fiscal support was going to affect global growth in a nutshell, and then also advanced economies were expected to see a decline in their growth as well. Now, coming into 2025, what really is the expectation? Now, according to the IMF, growth, they are pretty much a little bit expectant on what the growth in global growth is going to be like, and they're expecting it to climb to around 3.3% and then moderate around 3.3% in 2026. Now, compared to the World Bank expects that global growth is going to decline a bit to around 2.7% in 2025, and then remain around the same level, so around 2.7% in 2026. Now, the downside to this outlook is that there could be very heightened policy uncertainty. You see Trump coming in with a lot of policies. You see the labor market coming in the UK for the very first time in 14 years. A lot of things are going to change. You see. You look also across Europe, a lot of changes. You look across Asia, getting ready for the tariffs. You look also in Africa, there's been a lot of changes, similar Botswana and other African countries. A lot of incumbent governments have been taken out of power because of the way economies were run. So there's heightened policy uncertainty, and then there's also going to be very diverse trade policy shifts, especially between the US and then China. Now, if you throw geopolitical tensions in the midst of all of that, then it makes sense. If you throw in inflation as well, it makes sense. So those are all downside risks to the kind of global growth that global analysts and some of the big firms in the world are expecting. Now, on top of all of that, they are expecting that there's going to be very weaker growth in some major economies across the world. Now, what could be the possible solution for this slowdown in global growth? I think the first thing to look at is interventions that are going to mitigate some of the conflicts that we see across the world. And it's very good that in the very first month in 2025, you see a ceasefire between Israel and Hamas, making it much more clearer as to where the world is going to head towards in terms of geopolitical tensions. You have also Trump coming in and saying very clearly that if he was in power, you are not going to see the tensions that we are seeing currently between Ukraine and then Russia. So that is it on global growth. Now, what's the expectation for global inflation? And in 2024, inflation was, according to the World Bank, inflation was expected to decline, really. And from their reports, when you read it, they come to a conclusion that inflation was really below target, over 60% of the countries across the world, right? And we all saw it in 2024, in the first half. For Ghana, for instance, we saw a very steep decline in inflation. But in the second half, just like the US, just like the UK, just like almost every other part of the world, inflation started picking up again. Now, the expectation is that inflation in 2025 is going to drop from around, most countries haven't reported their inflation. So the reported average across the world is around 5.8% for 2024. By 2025, the expectation is that it's going to drop, according to global analyst consensus, to around 3.6% and then drop again to around 3.2% in 2026. Now, looking at this projection, what really is informing this projection? The main thing that is informing this projection is the view that commodities are going to drop further. We saw that drop in 2024, and they expect it to drop further, shedding about 6% of its value in 2025 as well, just to add on to the drop in 2025. And then also you have that ripple effects in inflation across the world. Now, in the midst of that commodity play, Brent crude oil is expected to drop very significantly as well, to around 71%, $71 per barrel, due to the robust supply that is expected, and then also subdued consumption, like I mentioned earlier, in some major economies. And that's together is supposed to nullify some of the geopolitical tensions and the effects that it would bring in terms of oil prices and some commodity prices in 2025. Now we've looked at the global economy, we've looked at in terms of GDP, we've looked at it in terms of inflation. Now, how does it look in the US? What is the US forecasted to look like? Now, the US forecast is not so clear with inflation. You have a very sizable amount of people, a sizable number of people not very certain about where inflation is going to be. A sizable number of them are saying that inflation is going to go up, and at the same time, and that is because of the tariffs that is expected from Trump in his second administration. So that's their basis. Now you have a second group that has expectation that inflation is going to drop based on some of the policies that the Fed is going to undertake, etc., in 2025. So the view on inflation is not really clear. But if you look at global analyst consensus, they're expecting that inflation will drop from the 3% that is going to be seen eventually in 2024 to around 2.5% and then stay at the same level in 2026. Now, if you move away from that and you look at GDP projections, the Fed, the US Fed, and then the World Bank, they both expect that the US economy is expected to slow down. Now, in 2021, where they experienced some of the largest growth since 2015, it was around 6.1%. It dropped to around 2.5, climbed to around 2.9, and tentatively it's expected to be around 2.5% in 2024. But in 2025, they're all expecting that growth in the US is going to slow down. And that's mainly because they are anticipating a deceleration in the labor market. Mind you, consumer spending forms about 70% of the US's GDP. So if there's going to be a slowdown in labor markets, then that is going to have a significant effect on their projections on what GDP is going to look like. And then also, I've already mentioned what the hikes due to the climb in inflation recently in the US is going to have on global on the US's growth prospects in 2025 as well. So it's positive in terms of inflation, but if you look at GDP, growth is expected to be a little much slower. Now, you put all of that in one box, and then you also look at what people were expecting in 2024. They're expecting the US economy to do very badly. When we do the research at the first point in time, the probability of the US having a recession in 2024 was about 50%. Compared to China, it was around 15%, and that didn't pan out. So hopefully we see a similar situation in 2025 and going forward. Now you looked at the US. How about China? How is China going to look like? Now, China's inflation is expected to climb further in 2025, mainly because of they are expecting food prices to normalize. And from the reports, when you read it, it looks like food inflation sort of decelerated in major amounts in 2023, heading into 2024. But even with that, you see that inflation was around the same level. The expectation is that based on global analyst consensus, inflation in China is going to climb to around 0.9% and then also increase further to 1.2% in 2026. Now, what is China's GDP going to look like? What's this output going to look like in 2025? The expectation is that there's going to be weak domestic demand in China due to same labor conditions as mentioned for the US. And then also there's an expectation that their real estate sector is going to have challenges. And then you throw in the mix decline in exports, mainly because Trump on the other side is looking to place a lot of tariffs on Chinese products, etc. If there are no exports, then your outputs with regards to GDP is going to be much slower. Now you looked at US, you looked at China. How does the Eurozone look like? And funny enough, the Eurozone appears to be much brighter. And you look at the trend that's good is expected to be seen in inflation, peaked around 8.4% in 2022, and then a drop to 5.5 in 2023, and then a drop hopefully after December numbers are released to around 2.4. The expectation is that it's going to drop further to around 2% in 2025. So inflation is expected to drop in the US, inflation expected to go up in China, inflation expected to drop in the Eurozone to around 2%. Now, a lot of the tensions that we've seen in the world since 2022 up until 2025 has been somewhat around Europe, right? And if you exclude, based on the projection that was done, if you exclude Russia, Turkey, and what's the last one? Ukraine, the forecast improves for Europe and Central Asia in terms of growth that is expected to be seen around that area. They are expecting that growth will climb from around the 0.8% to around 1, and then increase further to 1.2. Now, the upside positivity about this projection that was done latter part of last year is that now you have a ceasefire in between Israel and Hamas in Gaza that could probably have effects because of trade routes, etc. Now, private consumption is expected to play a very significant role together with investments in as part of some of the growth drivers that are going to drive growth in the Eurozone. Now, the problems that are underlining for this growth projection is that the tensions in the region haven't really subsided. You have Russia coming back to throw threats at the UK. The conflict between Israel and Hamas is not really dead that much because you haven't addressed the root cause, and among other reasons. Now you throw also in the mix heightened global policy uncertainty. Spoken about that extensively, and then also the almighty tariffs from the US. If the US broadens the tariffs that they expect to impose on China, they broaden it to other European countries and other countries, then that is going to have a very significant effect on trading, movement of goods around, exports, imports, and that's going to have effects on growth. We've looked at US, we looked at China. How does the stock market really look like? Now, the world has been through a lot of shocks, really and truly, and a lot of downturns. But over the long term, the S&P 500 has managed to impress. It's done about 33 times since December 1989, and some of its longest streaks of losses has been around this period, right? And that's pretty much expected because you had the dot-com bubble burst around the early parts of 2000 thereabouts, which led to a drop to about 9.1%. And now you had the US recession and the very short recession between March 2001 and then November 2001, around that same period. You had the immediate shock of the 9/11, also in 2001. And then in 2002, you had a very peaked accounting scandals in the US as well, which affected, investor confidence, etc., leading to a further drop to 22% in the S&P 500. Now, when you look across, and the next part is around 2008, where the world went through a global financial crisis, and then in 2018, and this was the very first time that Trump introduced his tariffs. You saw that the S&P 500 was hit pretty much because nobody was really anticipating that the market was caught in a shock. Now you see 2022, when Russia invaded Ukraine, everything was going haywire. You had hikes in monetary policy. People were very scared about what the market was going to look like, whether there was going to be a crash. So at the end of the markets that year in 2022, the S&P 500 lost about 18% of its value. But if you look at it holistically, in the 34 years that I've shown here, the S&P 500 has outperformed in about 27 of them, right? And averagely has done around 11.7% yearly since 1990 up until 2023. Now, how does that look? How did the S&P 500 really perform in 2024? Now, it did a whooping 25% in dollar terms, total return. You look at the likes of Vistra Corp. Now, this is the index, right? The index has done about 25%, but this is about 500 large cap companies in the US. Now, if you look at them individually, there were very huge outperformance in there, right? You have the likes of Vistra Corp, one of the largest performers in 2024, did around 258% in dollar returns. You look at Nvidia did around 171% plus. You looked at General Electric did 150 plus in returns, dollar return. You look at Netflix, which most people are conversant with, did around 83%. So there's been a lot of individual stocks in there that have done very well. But when you look at the index as a whole, then it ends up with around 25%, mainly because you had companies like Intel, which I'm going to go deeper into, losing around 60% in 2024 alone. You had Adobe also dropping around 25%. You had Halliburton down, you had Nike down, and a lot of others. So in 2024, the S&P 500 return around 25%, which is not pretty bad in dollar terms. Now, I'm sure you are very conversant with the fact that Blackstar has exposure to some of these securities through our funds. I'll go deeper into that in other slides. But most of the people that invested with us ended up enjoying some of these returns. Now you look at the Nasdaq 100. Now, what has it done over time? And I've spoken about some of the very huge trends or the very huge things that impacted the global economy since 1990 in the very previous slide. Now, how has the Nasdaq 100 done? Mainly looking at it through the technology lens, and it has done pretty much well as well, around 6%, 6 times growth since December 1999. In 2000 to 2004, it experienced some of its very huge drops. And it's very understandable because the dot-com bubble was much more related to tech. So it got hit very much, 36% in 2000, 33% roughly in 2001, and 38% in 2002. Very much hit by the financial crisis in 2008. And then also I mentioned the first introduction of Trump's tariffs. And you saw that there was an effect on the Nasdaq 100 and companies that were in there, returned only around 0.04%. In 2022, it did around 32%, but averagely it's done similarly around the 11.7% that you saw that the S&P 500 did. Now, the real thing that you really need to look at, and the thing that most people would have at the back of their minds, is what did it do in 2024? It did around roughly 26%. And the stock that really brought it down was Intel, which I spoke about in the S&P 500 charts. The main thing that was surrounding them was they had leadership problems, right? Their CEO part was ousted due to slow progress in strategy. You also saw them record losses in, I think, Q3 as well. And the markets felt that it had lost, not the market felt like it had lost market share to AMD and then Nvidia. So that led to the sell-off, made it lose around 60% of its value in 2024. So that really is a story, looking at the S&P 500 and then looking at the Nasdaq 100 in 2024 and looking at them on a very longer timeline. Now, if you look at them in terms of asset classes, sorry, Ghana bonds didn't do really well in 2024, down roughly 8% dollar terms. In 2024, you had developed government bonds down around 2%. You had investments, investment grade bonds down around 1.1, commodities up around 5.4%. You had high yield and emerging market bonds up 9.2%. And the star performer here really was technology, right? Which is indicative of the Nasdaq 100 index that I showed you in the previous slide. You had US equities as well, which is representative of the S&P 500 as well, also up around 25%. This is not the whole of the charts. I'm going to go deeper into this in subsequent slides. Now, what's the expectation for asset classes, some asset classes going into 2025? I mentioned earlier that the global view is that inflation is going to drop, and it's mainly going to be around commodities. So commodities are not expected to do much in 2025, mainly because the expectation is that the oil prices, Brent crude oil is going to drop to around $71 per barrel. And then also you have grains, but gold could increase if geopolitical tensions persist. So that could be the upside and the downside risk based on that outlook. Now you look at the US, and there's a lot of optimism even in the midst of the tariff scare. Most of the reports that I read from Barclays, from HSBC, from JP Morgan, from Goldman, most of them have come to the conclusion that the tariff introduction by the Donald Trump government is not going to have as much effects that it had in 2018. So it's not going to have so much effects because people, not governments, companies have pretty much strategically positioned themselves to not have to not be hit so much by those tariffs. It's something that has been said in the past 2 years. He's spoken about it severally. So most of the companies have been preparing for that. And hopefully we see that pan out and the US equities not having been hit by some of the tariffs that are going to be imposed on China and other countries if need be. So the tariffs are going to be there. Deregulation is going to help really with US equities. And then you also have in the midst of all of that tech growth and new innovation, and some of the global themes are emerging in AI, genomics, robotics, etc. going into 2025. Now, emerging market equities, which did around 8% in 2024, there are very high prospects for emerging market equities. But then again, if you look at the currency aspects, that's only going to be the downside. You look at real estate as well, and if the fires continue, you could have very good gains from there in real estate in terms of construction, etc. in 2025. So that's the outlook for 2025 with regards to US equities, commodities, emerging market equities, real estates, and all of the others. Now, you've looked at everything across the world, Europe, North America, you've looked at Asia in a bit, but what is Africa's growth going to be like? And Africa's growth the outlook for Africa is very positive. Expected to be inflation expected to drop to around 9.8% based on analyst consensus. GDP expected to grow. But why all of these projections? From the World Bank reports, the main drivers is going to be really industrial commodity exports in countries, and then also the ease in financial conditions across the continent. In the midst of inflation dropping, so inflation is expected to decline. You are also expecting that financial conditions will ease, and then also you're expecting that industrial commodity exporting countries are going to see a very big boom. Now that feeds into the forecast that you see here for Africa's GDP. You saw its peak in this charts around 5.1 in 2021. You see the decline, but expected to grow to around 3.2 and then increase to around 3.7. The outlook for Africa is very encouraging, but there are lingering problems, right? Which is one, global instability, the geopolitical tensions. Now you have, for every single, most African countries, we are battling with government debts and very high inflation levels. That could be that could have very huge impacts on us. Now you see trade tariffs conversation being thrown around. That would mean that people will be restricted as to what they can import and what they can export from specific countries going into 2025. So those are the downside risks to this outlook for Africa. Now you look at Africa, and there are some countries that you definitely have to look at, and one of them is Nigeria. So Nigeria's picture also looks very great. Inflation forecasted to drop to 25.3%, GDP expected to climb, and all of this is due to the very high tightening that you have seen in Nigeria in the past year. Now, inflation in Nigeria hasn't really softened like we have seen in Ghana. Inflation in Nigeria has been really high. So the tightening that has been seen over time is expected to materialize in 2025. So inflation is expected to decline, and that should boost consumption and then also support growth in the services sector for Nigeria. Now, Nigeria is an oil producing country as well. So oil production is expected to increase, but then also it's expected to remain below OPEC quota for them. Now, what are the problems when you come to Nigeria? The problems are very glaring. One of them is the fact that Nigeria at this point in time is fighting bandits in the north. And news that has come out in the past 2 months is that military forces have mistakenly dropped bombs into Islamic communities and Islamic gatherings, thinking that those were part of the bandits in the north. And that has really sent shockwaves around Nigeria. The global community is watching keenly if that fight against Islamic communities or Islamic terrorists in the north of Nigeria is not taken very seriously. That could have implications on Nigeria's growth trajectory. Now, the Africa problem is still evident in Nigeria. If global stability is not really strong in 2025, it could have effects on Nigeria. Nigeria is also in the same loop as Ghana in terms of government debts and their trajectory around their fiscal space as well. Currency is also a big issue for Nigeria, just like it is for Ghana and other countries across the continent. Now, how does South Africa look like? What is South Africa expected to look like? Inflation is expected to drop, peaked around 6.9 in 2022, dropped 2023, expected to be around 4.5, then expected to drop again based on analyst consensus to around 4.1% in 2025, and then again peak. You look at GDP as well, and the drop has been there, very clear. And I remember in last year, there was a lot of news around power outages in South Africa. But now the projection is telling us that GDP is expected to go up. Why are they saying that? From the reports, when you read both the IMF reports, you read the World Bank reports, and you read other reports collectively, there seems to be an improving energy availability in South Africa, and there are a lot of good reforms that are expected to push their economy towards this 0.7% growth, or 1.7% growth in 2025. They're also expecting rising business confidence. It should have a very positive impact on private sector investments, and then also household consumption is expected to rebound. So a lot of good stuff expected in South Africa as well. Now let's come back to our beloved Ghana. Now, Ghana, together with all the African countries and some of the countries across the world, we are expected to see a slowdown in inflation based on analyst consensus. Right, the economy is expected to be much more robust. The projection is that we are going to end the whole of 2024 around 4.9%. It's high because of the number that you saw in third quarter's GDP, around 7.1%, I think, for real oil GDP. So it's expected, they don't know which direction GDP is going to go. But if you look at the World Bank's reports and the IMF's reports on Sub-Saharan Africa is expected to experience some growth. And I mentioned it earlier, mainly led by the industrial commodity exporting countries, etc. Now you have a new government, you have John Dramani Mahama calling out, soliciting for private investment, private participation in the economy, etc. That could have very good effects going into 2025. So that really is the picture in relation to GDP for Ghana. But inflation is pretty much not clear based on the reason why global analyst consensus is that it's going to decline, mainly because of some of the things that we see. So on our side, what is our expectation on inflation? And we're expecting inflation in 2025 to be, for lack of a better word, we're expecting it to be very dodgy. Should end 2025 around 26%. And the main reason why we are saying that based on our simulation is that the underlying issues that we have in inflation haven't really been taken care of, especially in food inflation. Now you've come right into 2025 and you have a lot of OMCs complaining about shortages in fuel. You are seeing fuel price hikes. Last week you saw price hikes, and also you have excess liquidity outside banks, etc. The Bank of Ghana has gone about sucking out or mopping up a lot of money from the economy, but then again, still you see M2 plus skyrocketing. So inflation is going to be very sticky. We expect it to be very dodgy in 2025, and that would also inform where monetary policy strategy is going to be from the Bank of Ghana. So inflation, no, we are not really setting it's going to be downward as we would expect. We are expecting some upward pressure based on some of the factors that I've mentioned. Now, you've looked at inflation. How is currency expected to look like? Now, in 2022, one of Ghana's worst years, the Ghana cedis worst years, we experienced that very huge depreciation in the currency in the third quarter of this. Chart is very confusing to look at, so you need to take your time. So from left to right is in years, and from bottom up is in quarters. So where these intersect is 2022 third quarter. We experienced that very huge depreciation in the cedi, around 22.45%. That led to that very huge decline in currency by around 39% roughly in 2022. Now we saw a different thing at the end of 2024 when there was that very huge appreciation in the cedi. The cause not really clear. Most people have attributed it to the fact that the central bank came in and provided support, etc. And that's what led into that very huge appreciation in the last part of 2024. And that really helped the number that we were going to see at the end of 2024. Now, when you look at averagely across the 5 years, the very final quarter has been the very final quarter has been the quarter where you see a lot of appreciation in the cedi, for that matter, in the last 5 years. So averagely since 2020, currency has been depreciating on a year-on-year basis around 16%. Now, what do we expect 2025 to look like? We try to be very conservative, and we looked at, hey, what's happening with the BDCs, the bulk oil distributors, and the FX forward that BOG has with them? What has been the demand? Now, the bars that you see here is the trend in demand. In 2022, you saw that demand very, very high. But now you're seeing that demand has really declined. But at the very latter part here, you see that it is climbing a bit. You read reports from some fund managers, some banks, and the output that is coming is that there's a lot of commercial and retail demand stirring up. And then also you look at, okay, what is BOG giving the BDCs at in T+30? And that's so just that to form an expectation of where currency is going to be. And BOG is given to them at a much higher rate, meaning that the expectation is that currency is going to reverse the levels that we saw before we saw that appreciation at the very latter part of 2024. So from looking at just numbers or the auctions that were coming out of the BDC's auction, you can see that currency is going to see a reversal in the next 30 days plus going into the first half of the year. Now, aside all of this, there's mounting commercial and retail demand, like I mentioned, and also we have resumed Eurobond repayments, coupons. Then, in the midst of all of that, the cocoa sector, which is one of your very huge places that you have inflows of FX, is also struggling. So there's going to be that currency struggle that we envision for most parts of 2025. Hopefully, it's a different story, but based on what we see currently, that's what it looks like with the resumption of coupon on Eurobond payments and coming to the end of all of your restructurings, basically. Now you've looked at currency. Now, what does it look like on the treasury bill markets? Now, you've been locked out of the international. You've not really been locked out of the international community, but you can't really go back now because you just had a restructuring with them. People have taken haircuts. Most people are not happy, but you've been constrained, and the main area where you've been raising money has really been at the treasury bill markets. So we've shown charts in several months where we've explained the fact that we are slowly getting to a place where T-bills could be a problem if not taken, if care is not taken, because of one, the rates that we are seeing on the markets. And at the end of the day, the markets will be the same people that would be hit if T-bills are touched. But then again, you have the incoming finance minister stating very clearly his stance on the fact that there's not going to be a restructuring on T-bills. But then again, you need to look at what the maturity profile is just to be safe. So in the first quarter of 2025, we're expecting that maturities are going to be to a tune of around 68 billion Ghana cedis. Second quarter, around 27 billion Ghana cedis. A chunk of it's going to be in February. February, not much happening in February. I think that will be the very final payments for KPI, PIK payments. And then in subsequent parts of the year, we are going to see coupon payments in Eurobonds and other government obligations that government has. So this is the T-bill maturity profile. As of yesterday, 20th, government still has around 11.1 billion in obligations for January 2025. In February 2025, has obligations around 28 billion, around 27 billion in March, around 28 billion, and then it goes down. But then again, bear in mind, these ones are going to be rolled over into these years. So you're setting yourself up if you don't get a grip on the rates that you are seeing on the markets. If we allow rates to cross 33, 35%, we are going to be shooting ourselves in the foot as investors. Now, how did the markets look like in terms of trading? Trading has picked up since the domestic debt exchange in 2023. In 2022, before the domestic debt exchange program, T-bills weren't, so the blue ones are T-bills. T-bills weren't as much, but you could see the progression in growth. 2021 around 7 billion. It did around 17 billion in 2022. 2023 did around 58 billion. And then now it's done around 118 billion. Wow, in 2024. Now you look at that growth between 2023 and 2024, and that growth is around 77%. If you look at T-bills alone, comparing 2023 to 2024, that growth is around 105%. So there's growing appetite for T-bills, which makes sense because that's really what people are much comfortable trading at this current point in time. You look at that level, the level that you see here, and you compare it to where the market was in 2020, and even T-bill trades have managed to surpass the whole of market trading on the markets in 2020, which is quite impressive. Hopefully, when the general bond market picks up, we still continue to see this level in T-bill trades, so that the market is much more liquid. You have much more options, and you can do more. Now, the expectation is that now that government has finished its restructuring, the idea is that with time during this year, 2025, trading is going to pick up. It's not going to be in T-bills, but it's a two-way street. Government has to show the markets that it has the will and it has the financial power and capability to be able to honor its obligations, and government needs to be transparent with the markets. It needs to have a series of conversations with the market, let the market know where it's at, so that's very clear where we are headed, so that we don't find ourselves in the situation that we had in previous years. So we've looked at a lot of things. We've looked at what growth is going to look like. We've looked at what inflation globally is going to look like. We've looked at North America, we've looked at Asia, we've looked at Europe, we've looked at Africa, we looked at equity markets, we've looked at bond markets, we looked at Ghana, we looked at Africa. Now, let's compare all the asset classes. And here I introduce the Ghana Stock Exchange. And it was very interesting to note that the Ghana Stock Exchange in dollar terms, Ghanaian equities outperform the Nasdaq 100 and the S&P 500 in 2024, which is very impressive. Growth from the likes of Unilever, the likes of Atlantic Lithium, quite a number of them. A lot of them making a lot of huge returns in 2024. Now, that should tell you the prospects of this market, and almost half of the gainers were from the financial services. And if you take your mind back in 2023, a lot of people weren't really looking out for financial equities at the point in time, because you saw very high impairment losses. But almost half of the gainers that pushed the Ghana Stock Exchange last year, 2024, were financial stocks, and we expect that would continue into 2025. But there's a caveat. That would really depend on the earnings numbers that we see for the full year, because for Q3 the numbers were pretty good, especially for the likes of ETI and EcoBank and some others, just to mention them top of head. The numbers were very good. There are lots of things that you can look out for the Ghana Stock Exchange in 2025. If you're looking for dividend payouts, there are some sort of sure bankers, for lack of a better word, the likes of Total, MTN, Bob, SCB, a lot more others. But then also you can do your own personal research. There's a lot of work that we do, that we send out on some of these companies. We have fact sheets, we have quick takes, a lot of them, just to keep the market up to date on some of these companies, their earnings, and what the expectations should be towards them. So I've said a lot of things. since the beginning of the presentation and up till now. And I'm going to share a very key insight that I read from that I've seen from some of the reports that I've read. This year is not a year to be biased on this is what we do. This is how I want to do it. This is how we did it last year. Most of the reports that I read have said that this is a year to put all biases aside. It's a year that you need to look at themes, right? What is really driving this growth? What is really informing the trend? And all of the reports from the very big investment banks across the world have highlighted some of these themes, or the fact that you have to invest more in themes than in asset classes. And the idea is invest in companies that are proven record in artificial intelligence, invest in companies that are proven record in robotics, invest in companies that have very proven record in energy transition, companies that are applying blockchain, companies that are at the forefront of genomics. And the good thing is that Blackstar gives you exposure to all of these things through the Enhanced Equity Beta Fund and through the Christian Community Mutual Fund due to its exposure to the S&P 500, etc. Through our app as well, you can be able to purchase some of these single stocks and hold them in your portfolios. So there are lots of things that you can do. So this year, don't be biased. This year, open up your view. Don't sit on the fence. Apply some pressure. Do all that you can to make sure that you are doing different things to be able to see different results in 2025. So there are going to be challenges in 2025. That is very clear. But then also there are going to be opportunities if you really know where to look. And that's the very simple way that I think I can end this presentation. So thank you very much for listening to me, and thank you for joining us for our first edition in 2025. Thank you. Ernest, over to you.
Thank you very much, Daniel. This has been very insightful. Thank you for the impartation of knowledge. So the floor would be open for contributions and then questions if there are any. I personally have a few questions. I would be throwing them at you, and then we will just hold and go for our polls. As usual, we will continue with our anonymous polls just to gather a few opinions from our participants. But Daniel, you can note these questions down. So all right, sure. So from your presentation, you indicated that IMF has forecasted global economic growth to be at 3.3% for 2025. And also, given all the inflation trends that you discussed, as well as geopolitical tensions, what strategy would you recommend investors, especially those down here in Ghana, to take in terms of balancing their risk and then also return? Whilst you answer that, have in mind that some of these themes that you shared actually it's a sort of opportunity for fund managers. However, when you go to the banking sector, they're unable to take some of these positions. How can they also make use of some of these information that you've shared in terms of investment strategy? And then also, do you think with Donald Trump's second coming or his US presidency, how do you think it can affect global investment trends with emphasis on global investments? Do you see increased volatility and uncertainty? How do you think the relations of the US and Africa would be like? And then also in terms of geopolitical stability and investor confidence, what do you think would happen? So please take these notes. Let's go for our polls. When we are back, we will open the floor for contributions and questions as well. So quickly, let's delve into the macros. There are two questions in here. We have one on inflation and then the other on currency. So on inflation, we would like to find out from you where you predict inflation for January 2025 will be, given that that of December increased from 23 to 23.80. So where do you think inflation for January, the first inflation for the year, would be at? Is it going to be 23.5 or 23.51 to 24 or 24.01 to 24.5, or it's going to be probably above 24.5? The second question under that same segment has to do with currency. How do you expect the Ghanaian cedi to perform against its major trading currencies in 2025? So do you think there's going to be an appreciation? Would it remain stable, or it's going to depreciate moderately or depreciate significantly in the year 2025? Now into the financial markets with emphasis on fixed income here. We would like to know from you, which asset class would you most commit your funds for the first quarter of 2025? So January to March, which of these asset classes outlined here would you commit huge chunks of your funds? Are you going to continue with the treasury bills or GOG bonds or international equities, real estate investments, or commodities like the new gold that Bank of Ghana has issued, or emerging market bonds? We have US treasuries, mutual funds, or euro bonds. Secondly, what factor would influence your decision the most to push more funds in the short end of the curve on the Ghanaian treasury market? We noticed that week on week, most investors take positions in the short end of the Ghanaian treasury bill market. And so we would like to know from you what factor probably is actually influencing people's decisions to go with that investment strategy. Does it have to do with the attractiveness of the returns compared to other asset classes? Is it the low risk nature of short term investments? Is it about uncertainty about long term economic stability, or preference for liquidity and easy access to funds? Or probably there's a lack of any other viable long term investment, and so you decide to play within the short end of the curve. All right, please note that even when a new poll is launched, the previous one still remains live, and so you can actually take your time to go through and then cast your poll appropriately. Even after the poll ends, it will still be live to give you some time to cast your poll. Okay, to the next set of questions, we'd like to know from you, how would you rate the overall economic outlook for Ghana in 2025? Are you optimistic? Are you somewhat optimistic, or you want to remain neutral, or pessimistic, or very pessimistic? Secondly, which of these economic trends do you believe would have the greatest impact on Ghana's financial markets in 2025? Is it inflation trends, currency stability with focus on CD versus USD? Is it interest rate adjustments? Do you think debt sustainability policy reforms would be the deal, or foreign investment inflows? Among these alternatives, which one do you believe will have the greatest impact on our financial market? Now to the final sets of questions, and this is on the big picture as we saw. We would like to know from you, what is your view on global economic growth in 2025? The IMF has forecasted 3.3, but what do you think? Do you think it's going to exceed the forecast, or would they match the forecast, or it will fall short of the forecast, or you are not so sure?
Second, India. Which region do you think will drive global economic growth the most in 2025? Is it North America, USA, Canada, or Asia, China, India, or Europe, the Eurozone countries, or Africa with lots of potential, or Latin America? Now, away from the regions, let's find out from you, which global event do you think will most influence markets in 2025? Is it geopolitical tensions, technology advancements, climate change, and natural disasters, or policy changes in major economies like the US, China, and EU? Which of these global events do you think will most influence markets in 2025? And then finally, how do you think global tensions, example US China trade relationships, will affect Ghana's investment climate in 2025? Would it increase uncertainty? Would it strengthen our ties with the US? Would there be a minimal impact on Ghana's markets? Or you think there's going to be positive effects on the Ghana stock market? All right, that brings us to the end of our polls. But like I've mentioned, all the poll questions will remain live even after this particular call. You can take your time and then cast your poll appropriately. All mics are also going to be allowed. And so if you have any contributions or you have any questions, you can just put up your hand and we will give you a call for you to share your contribution or ask your question. Now, Daniel, back to the questions I asked you. So the first one was in relation to the IMF forecasted growth of 3.3 and the inflation trends across the globe. How do you think investors can actually strategize to shield themselves from much risk and then also get the necessary risk-adjusted returns that investors seek? Whilst you are answering that, I would also like you to understand that some of these themes that you actually recommended are quite biased towards a particular set of investors, like the fund managers, which the banks cannot take positions in them. So how can they also, take advantages of all these opportunities in the global space?
Yeah, there's no thank you for the long question. And it's the difficulty level. But I think the underlying thing from your first question is balancing risk and return. And I think the best way that you can look at it is from the angle of diversification. And that's the first thing that comes to mind when you want to balance risk and return. I think it'd be very prudent to look at some of the defensive stocks, especially more things that from the point of view of the portfolio manager or from the point of view of the proprietary trader, things that they feel would not have significant impacts, or sectors that would not have significant impacts in the year. Especially one, I think when you want to look at defensive stuff, you look at consumer staples. One, healthcare. Not that every people are going to be sick all the time, but those are the kind of sectors that you can bet on. Utilities, another one of them. Telecommunications, another one of them. A lot of people these days do a lot of Netflix, and all of that comes with buying data. And now people don't do a lot of calls anymore. So no calls, but they do video calls a lot, WhatsApp calls, etc. You can look at some of these areas that you can bank on, that would always be in use or are always going to be in demand. I think for the next part, if you want to take advantage of some of these themes on an individual level, you can come through the funds. Doesn't matter where you work. It doesn't matter what industry you are in. Our system is built. It's built in such a way that every single person can participate, especially fund managers, etc. So just call us, sign up with us. Banks, I mean, you mentioned the fact that banks can they don't have that much liberty to some of these themes that I've mentioned. And I think the one thing that we didn't really mention extensively is the corporate bonds. So you can look at the corporate bond markets. We help Leshare go with some of its issuances, very very trustworthy securities on the market as well. You can look at the likes of Quantum as well, very good numbers. Very good numbers. There are lots of others. Casa Preco looks very healthy. Quite a number of them. So there are quite a number of things that you can look at. If you have from the banking, you're looking at it from the banking perspective, and your hands are tied. But then also in the midst of all of that, I remember looking at some banks' balance sheets, and you can see other securities. Sometimes you can see equity. So if you have if you have the liberty or the room to have exposure, I think you should definitely take that opportunity. You can also do that on a personal level as well. Now, the very last question, which I feel is one of the trickiest ones, is Trump tariffs. You know, I was very surprised last week when Trump came out to say that okay, he's allowing TikTok back into the US because most of his campaigning throughout trying to come back into power was when I come back, TikTok is gone. I think he even started the process. So now I'm looking at Trump in a lens that Trump is someone that can really change his mind. I don't think he's going to change his mind on the tariffs really, but then there's an iota of possibility in there. Now, if you put that on one side and you look at the other bits, tariffs on Chinese imports, etc., which could broadly impact other economies, could have inflationary impacts in the US, like I mentioned. So I think the US government and the Fed has to pay very close attention to that. It is going to be a very huge talking point in 2025. You look at the World Bank reports, and they had a whole section of what the implications are going to be, and there are a number of them, some of which are mentioned in the presentation. So the Trump tariffs are really going to have an effect, but you have most of the investment banks now trying to take a very conservative view, thinking that we are going to see the same thing that we saw in 2018 in Trump 1.0. So that's the idea, that's the conversation, that's the expectation. Hopefully that is going to play out. And I think that if you're a company that was in business around that period and you knew what Trump's view is concerning tariffs, I think in the 4 years preceding his re-election, you should have strategized. And I think companies that have re-strategized within that period are going to benefit because the market is going to trust them and the market is going to bet on them very largely going into 2025. So yeah, that's my view on Trump tariffs. They are going to have effects, but then also they are going to be very huge upsides for those who have already prepared.
Hello. Sorry about that. Apparently, I was on a mute. I was on mute. Sorry. Okay. So Michael is asking, what are the benefits with investing with a registered business over investing in his capacity as an individual? And what would you recommend for a new investor? Okay, Michael. So there's no particular advantage or disadvantage with investing with your registered business or investing as an individual. The registered business can take equal positions as an individual investor. And so there's no any particular advantage or disadvantage over the other. So whichever one you prefer to use, you can actually invest with that. It all depends on your liquidity. If you think you would want to invest with your registered business so that the assets in there would be for the business, that's also okay. If you would want to invest as an individual too, that's fine. If your registered business is a limited liability, then maybe you are going to be shielded in times of any indebtedness with your personal assets. But if you're investing as an individual, if there's any issue with your indebtedness, some of these assets can actually be used to defray your debt. Apart from that, I don't think there's any particular differences. Are there any questions or contributions or reactions to what has been presented today? Any contributions? Now, Yako, I see you're unable to take the polls, but from my end, I still see they are live. And so please try again. Let's see. Whilst we are at it, there's a question sent to me privately. Someone would like to know domestically, as alternatives to investors, when is government likely to come to the bonds market? Daniel, you want to take that?
Yeah, I think that's a very good question, and I'll take it from this angle. I think the best way government can come to the markets is something I would call a debt sustainability bond program. So you would need to have a conversation with the markets, and I think the market will be very much open to having that conversation, especially based on the fact that we are seeing spikes in some areas in our maturity profile, etc. I think the best way government can come to the markets is by structuring out and having something that they can call maybe a debt sustainability bond program, something aimed at raising new capital, new debt or new money, aimed at reducing those very dangerous areas in terms of maturity payments and coupon payments. And I think that would really hinge on where the market is and having that very transparent conversation with the market. So as that's the quickest way I think you can come to the markets. The other alternative will be looking very good and very credible, and for the market to trust you, to be able to give money back to you. So there are two ways: look credible, act right, be transparent, and the other way is maybe through a debt sustainability bond program, where the market really buys into the fact that you've seen the maturity profile, you acknowledge it, you acknowledge the risks that lie ahead, and then you're proposing a solution as to how to address them. So yeah, that's my view.
All right. Thank you very much. What happens to a debt sustainability arrangement if treasury bills remain on the high and Bank of Ghana bills also remain highly more competitive than the bond rates?
Yeah, I think then easily you have a market that everybody wants, where there are options, where you're not just stuck at one place, but then you have the market is coming back because then you have like diverse options. You have T-bills, just like you mentioned. You have the new bonds in there. You have Euro bonds, which pretty much we've had the discussions on the DDP and the external one. We are done with all of them. Now you are at a trial stage where people need to see and be confident in what you are in terms of you being the government and then the prospects that they have together with you going into the future. So it's good to have options. So that's the best way I'm going to tackle that question. When you have that also thrown into the mix, then you have a market. And I think that would help with the kind of spreads that we've seen in terms of the bid ask and how people can really have trade ideas around that. Yeah, so that's my view.
All right, thank you very much. With the poll on which asset class would you most commit your funds to for the first quarter of 2025, I see 44% of people selected treasury bills and then 40% selected international equities like S&P 500 and then the Nasdaq. Guess what? Nobody selected GOG bonds. It means that acrimony towards that particular asset class still exists. All right. Any other question?
Twenty-one, 26, 24, 25, 26.
Yeah. Okay. Thank you very much, Daniel. In the absence of any other questions or contributions, the presentation has been very, very educative and insightful. The analysis were also very, very enriching. We look forward to this particular year, hoping for the best. Our gratitude also is extended to all our participants who made it to this call this morning. I trust that we are going to see you in subsequent ones for other exciting topics that we've lined up. As we draw the curtains, please allow me to also remind you that Black Star Group has a bouquet of products and services. On the global markets desk, we specialize in both domestic and international securities trading. We also have a robust investment banking team available to assist you with any services with regards to IB. We also manage some of the best performing mutual funds in the industry, and you can attest to the fact that our EBF, which Daniel alluded to, returned about 46.84% as at close of 2024. The CCMF also returned 39.26%, with Plus Balance Fund also returning 38.44%. These are leading mutual funds on the market. And so if you're interested, you can always reach out to us. Should you have any questions or require further information with regards to the presentation or that has been discussed today, you can always reach out to us. We thank you for your participation. We hope to see you same time next month. Have a productive and prosperous 2025.